But let's focus on JK Tyres. It was a strong set of earnings from the company. The revenue surged while the margins have expanded. We spoke to the company's president, Anuj Kathuria, who said that the overall outlook for the tyre industry and the company is positive, and they expect the subdued rural demand environment to improve going forward. Listen in.
So the overall outlook for the tyre industry and for JK Tyres especially is quite positive. This is based on the buoyant demand coming from both OEMs as well as the replacement market. As we see that the government spend on infra projects is on an all-time high, and we expect that this momentum will continue. The GDP growth rates being projected are also quite positive. In fact, for the year, we are now seeing we're talking about 6.5%. That augurs well with the overall demand for automobile industry as well as the tyre industry. Monsoons have been pretty good. So there also, with the festive season around the corner, we expect that the further demand would be coming in. Even the rural demand, which has been subdued, should be looking up going forward. That gets us going on the 2-3-wheeler tires. Farm segment, yes, it is a little subdued, but again, I think so there should be some recovery coming in over there as well. So overall, the domestic demand, whether it is in the replacement market or even in the OEMs, should be looking good for the next 3 quarters. Quarter 1 was also a good quarter for us. We reported a consolidated net revenue of 3,729 crores, which is up by 2% on a year-on-year basis. So that is, that's a good indicator for the quarters to come. We saw yesterday that we had reported a operating profitability, the EBITDA of 465 crores. And this was basically an expansion in margin of 450 basis points on a year-on-year basis. So this was basically a result of our efforts on improved operational efficiencies, better capacity utilizations, and also it was supported by the stable raw material prices. So going forward, we expect that the raw material prices would be range bound. The stability in that aspect should continue. And we hope that they will remain at that level or even kind of soften a little more going forward. The demand being healthy and robust, we should see further expansion in the margins as we go along, especially in the second half of the coming financial year.